Welcome to the Professor Lending Institute, where we make sense of housing economics and the home buying process. I'm Jordan Steffaniak, president of Professor Lending, licensed loan originator, and your home lending professor. In today's episode, I'm going to be covering a topic of should you wait to buy a home for rates to go down? Perennial question, definitely the case now with higher rates. So let's get to it. So should you wait for rates to go down to buy a house? No, of course not. You can't afford to buy a house anyway. So why wait? Because you can't. I'm just kidding, of course, obviously. I'm just kidding. But that does get us to the point of the reality. Rates are at 7% right now, or higher, or a little bit lower, depending on where it is, whenever this video comes out. They're right at about 7%. They used to be at 3% or below. A lot of people, you talk to people, they got a 2.5%, 2 3/4 rate, and they don't want to move because they don't want to give up that rate. And I mean, that's a huge difference. That is a massive difference in money compared just to a couple years ago. $400,000 loan, 3% rate versus a 7% rate is going to be the difference between $1,600-ish and some change and $2,600. It's about $1,000 a month difference in a $600,000 loan. The difference between 3 and 7% rate. And this is just principal and interest. This isn't factoring in any taxes or insurance or homeowners association dues or anything like that. You're going to be at $2,500 versus $3,900, almost $4,000. So really, annually, you're looking at losing $12,000 to $18,000 in interest per year. That seems like a huge income chunk. So I mean, if you have to think about $12,000 to $18,000 and you're thinking about taxes and how much that's taken out of your income, you've got to be making an extra $25,000 to $30,000 a year, depending on, give or take some, in order to afford the same house from a couple of years ago to today. And home prices keep going up. So what do we do? Are we going to wait until rates drop? I mean, rates are supposed to drop, right? There's no way they can stay here. Well, let me give you a couple of tips because I'm going to tell you shouldn't wait, and here's why. And you should go ahead and buy a house. Not that you can't afford it, but here's why you should go buy it if you can afford that house at the current rate. 4 reasons. First, rates aren't going down anytime soon. That's the sad reality. I mean, we can all hope. Hopefully things change and mortgage rates drop. But the reality is that mortgage rates are often tied based on the bond market. And the bond market is tied to different economic reports and different factors like that. And the economics look stable, at least by my lights and by most expert economists, lead analysts out there. You're going to hear them saying that things look stable. Right now, the labor market is not breaking to the point where the rates are going to drop. The Fed has started to soften in their language of we're going to cut rates a bunch. And so the reality is we're probably going to be at a higher interest rate at least through 2025. Hopefully that changes mid-2025 to later 2025. We can see rates drop a little bit. Maybe we can see a little bit more of a drop. But the reality is right now we are at a pretty high interest rate. So rates aren't going down anytime soon. You should go ahead and buy. Don't wait a year, 2 years, 3 years, because then you're missing out on that time of living in your dream home or the home that you want. So the longer you wait, the longer you miss out on that. The second reason would be that you're buying a home, not a mortgage rate. You got to keep that in the front of your mind. Yeah, it sounds cool to have a 2%, a 3%, or whatever, but it sounds cooler to live in the home that you want to live in. So bite the bullet and go ahead and buy now. And here's a couple of reasons why you want to do that. So this is in the 4 reasons, but it's kind of building on this reason, which is the third reason total. And that's that mortgage rates aren't forever. Yeah, it's a 15-year loan or it's a 30-year loan, whatever you have in there. But the reality is most people don't actually have those loans for that long. Most people are having it for a couple of years because they move or they refinance. That's the beauty of this. You buy it at 7%. If rates do go down, then refinance. And you got to live in your home for that full year, 2 years, 3 years, whatever it is. Build equity in that home. And then you refinance at a lower rate. And you don't miss out on that opportunity. So it's a no-brainer. Buy the house now as long as you can afford it. And then refinance later. Or you might find out that you get a new job and you move again. And then that interim period is somewhat irrelevant. So you got to think in like 3 to 5 year chunks. Now the fourth reason. This is primarily for those who are renting. It's really only for those who are renting. If you're renting, you are throwing your money away into the garbage can. You're building no equity. You're not paying down a mortgage. All you're doing is giving money to a landlord. You're not getting anything out of this. Buy a house now. Even if rates are high, go do it now. You can refinance later, or you'll buy a different house later. Don't miss out on that window. I heard so many people who are renting, didn't want to buy a house before 2021, 2022, when home prices go through the roof and you lost all this equity opportunity. And now they're priced out of the market. They can't buy it. So don't wait to buy for rates to go down. Buy now. Now, if you can't afford the home at the current rate, that makes sense. Wait until rates go down if that's the case, so then you can actually qualify. Or maybe you need to think about resizing your expectations for what sort of home you want to get. Maybe you need to find a smaller house. Maybe you need to find an older house. Maybe you need to look outside the little range that you're looking in so that then you can build equity there and pay down that mortgage balance. And then when the time is right, you are able to purchase the house that you really want, whether that's because rates went down or because you actually have built enough equity to put money down on the new house, and at that rate, you can then afford the monthly payment. Now, if you already own a home and you're thinking about buying a new home, that's a different question than if you're renting. When I tell you, go buy a house, for goodness sakes, just buy it, please. If you already own a home and you've got a low interest rate, so you got a 2, 2.5, 3, whatever it is, and you're like, I don't want to ever give this up, I'm dying in this house, but your family's growing. Or you are really cramped next to your neighbors and you're like, I just wish I had a little bit more space. You got to think about a couple of things. Number one, can you keep that home that you're in and rent it out and buy a new primary residence? This is what I recommend most often. Keep that house, rent it out, buy a new one. I'll do another video at some point. So maybe depending on when you're watching this, I can explain some of the mechanics of that and how that works. But that would be my number one piece of advice. Then you get to keep that 2.5%, 3% rate, as well as getting a new house. The other piece of advice is to think about how much you value the different things that you're looking for in the new house. Maybe you need an extra 500 to 1,000 square feet. How much is that worth to you? $200 a month, $300 a month, $400 a month? Maybe it's a necessity. And then you're like, well, this rate just doesn't compare. I need more, another room, as we just had another child, or had 2 more children, and there's no more space. That's a necessity at that point. Then you have to do it. Or maybe you think about having the extra space away from the neighbors, having a larger lot, having a wooded backyard, having a fenced-in yard. Whatever it is, think about that. Is that worth $100 a month? Is that worth $750 a month? And then you can do some simple math and say, okay, it's worth it to me to have a higher rate and a higher payment because I value this thing more than I value X number of dollars. Because everybody's paying for different things. You're paying for hobbies. And maybe one thing you really want is you want to have a fire pit. And you want to have all these different things in your backyard, and you value that at $300 a month. Okay, then do the math. Is it worth making that switch? So fundamentally, in summary, should you wait for rates to go down? Absolutely not. Go buy the house now, refinance later. Maybe you'll buy another house later. Keep your house and buy a new one, a new primary residence. Now, if you're renting and can't afford, then do whatever it takes to save money, to create wealth, be creative, find smaller houses to get in the market so that you own a house and you're building equity. That's all for now. I appreciate you coming in, listening to Professor Lending Institute, and hopefully we'll educate you more soon.